Let's get more in the markets. We're joined by David Nelson, Chief Strategist at Belpointe Asset Management. David, always great to talk to you. Thanks for joining us. What do you think? More selling in Oracle and Broadcom. Is it going to be a while before investors forgive stocks like that?
I think investors are abandoning some very popular large cap secular growth trades. Some of these trades are part of the Mag 7. I think part of it is because for the first time in years, they have some choices. Every company on the planet has an AI policy today, and a lot of companies are getting that productivity bump. So investors are kind of looking down the food chain for some other opportunities, and a lot of other sectors that have kind of lagged for the last couple of years are suddenly taking off.
That's interesting. We did see the Russell 2000 hitting record highs last week.
Yeah, it's all part of that. It's all part of that trade. You know, right now, operating margins inside the S&P 500 and other indices as well are on the rise, in part because of AI. We're all using it. And, you know, the edge today isn't knowing whether or not your company has the next fastest chip. That's probably consensus at this point. It's really understanding what other companies can adopt this technology and take margins to new heights. And that's probably where the alpha trade is right now.
So you say that the builders of AI, NVIDIA, Microsoft, and the hyperscalers, they have these high multiples, 30 to 90. And you say for a stock trading at 50 times to double, it requires perfection. And so you think that might be putting some investors off.
Yeah, and in the case of Broadcom, it was a less than perfect quarter. They didn't really raise guidance everybody had expected them to do. A very key contract that they had with OpenAI seems to be pushed off an extra year. So that has to get repriced, and that's what it's undergoing right now. On the other side of the table, you have a company like from a couple of weeks ago, Abercrombie & Finch, who's started to use AI with a very undemanding multiple. AI actually added to their top and bottom line. You don't get a 5-10% move, you get a 40 to 50% move.
A&F, that's interesting. So how are they using it? I guess just more accurate stocking would be one thing.
Yeah, that's part of it. Inventory management, customer experience. Every company's using it. We're using it here, of course, at Belpointe. I'm sure they're using it right at the studio right now where you are. It's a fabulous set of tools. We're all learning how to use these to make ourselves more efficient and get more productivity each and every day. And each 1% move in productivity for the market does wonders for stock prices and multiples. It just may not be the usual suspects. Yeah,
we use it, but we trust but verify. We find you click through on the links that it gives you. Yeah, one thing I can't believe is how AI won't admit that it doesn't know something. I rarely see it say, no, I just can't find that information for you. Anyway, one stock you're watching, Salesforce. Now, apparently they have been notorious in the past for tooting their trumpet on earnings calls, but you say we got some candor from them?
Yeah, it got hit today, probably off the ServiceNow announcement. But what we're finding with AI, a lot of companies that are trying to deploy these AI agents, they're getting frustrated. A lot of large enterprises, and they're going back to some of these legacy software companies for some help. Even some of the consulting firms are getting a bid.
Okay. Now, you have a headline in one of your pieces here. The AI revolution is just getting its hands dirty. What do you mean by that?
Well, just look at the industrial complex. You know, it's not just about the cloud. I mean, when you build a data center, you're going to get your hands dirty. You're talking about traditional labor jobs. There's a real shortage of electricians right now. Some electricians can make as much as $500,000-$600,000 a year. That's kind of unheard of in past years. We're building out the electric grid. It's almost the old industrial economy is being revitalized by AI. So it's almost we're going from the cloud back to the ground.
Yeah, although, I mean, we did see a big run up in stocks like Eaton or, GE Vernova. They make the gas turbine equipment. So it is out there in the market, isn't it, that these electrical stocks could see huge growth?
There's massive growth there, and the multiples reflect it. GE Vernova is a name I don't own right now. God, I wish I did. But it's a pretty expensive name. Probably trades at around 90 times this year's, maybe 60 times next year's earnings.
Broadly speaking, how are you viewing the interest sensitives right now? And what is an interest sensitive? I suppose I'm thinking about banking stocks. Are they inflated? If the Fed goes on cutting, that helps their margins.
Well, the banks are a real harbinger of the kind of barometer of the economy, so to speak. And right now, GDP growth is climbing. We're seeing it in almost all the data. I've seen numbers go from 1.5% to 2.5%. There's some out on the edge as high as 3% for next year. That's probably good news for banks. I think it's pretty clear the short end of the curve is going to go down. We're going to have a new Fed governor in just a few months here. What I take pause with is the idea that 10-year rates might come down. I think that's going to be very, very difficult. I think 10-year rates will remain elevated.
You have a couple of stock ideas for us. They're fresh ideas to me. News to me, as the guy used to say, Kevin Nealon on Saturday Night Live. RPRX Royalty Pharma. What has drawn your attention there?
You know, we saw last month healthcare stocks outperform tech by about 1,600 basis points, 16% in a handful of weeks. Now, this is a fundamentally very, very different drug company because they don't discover drugs. They don't manufacture drugs because drug discovery is often a binary event and can be pretty risky. They invest in the revenue streams of very successful drugs and late-stage drugs about to go live. So in other words, they're betting on the winners. They've had a lot of success with this, and yet it trades at 9 times earnings with significant free cash flow. The earnings are kind of lumpy. I guess that's why it gets the low multiple. But at 9 times, I'm willing to sit with it.
And then finally, Vertex Pharma. The stock took a hit there during the summer, but what it's in cystic fibrosis?
It is, and actually, my only relation to Vertex is that royalty gets significant revenue from Vertex Pharma's cystic fibrosis. Fabulous franchise. Some risk for Vertex because they're desperately trying to get another revenue stream to accentuate this their cystic fibrosis franchise because it's such a significant portion of their revenue.
And then you have one called Huntington to close us out. Huntington Ingalls, what are they all about?
Yeah, it's the defense trade. And I love defense stocks because they're kind of an insurance policy for your portfolio because God forbid there's a geopolitical or military event. These are the only stocks on your screen that are going to be up that day. What makes Huntington different is they're one of only 2 companies on the planet that can build nuclear-powered submarines for the U.S. Navy. You cannot replicate the barrier of entry they have. They have a backlog of $56 billion, and they're about to go through a massive free cash flow bump because a lot of legacy contracts are going offline. The new contracts give them a lot more bang for their buck.
David, we always cover loads of ground with you. Thank you very much. David Nelson.
Thank you.
Thank you. Chief Strategist at Belpointe Asset Management.